So the project that we're developing is the Koluli project. It's based in North Africa, in Eritrea. You can see here the map. It's the project we're developing this in a joint venture with INEMCO, the Eritrean National Mining Corporation. 50% of that joint venture, 50% owned by Danakali, 50% by INEMCO. And you can see here the location on the map on the border between Ethiopia and Eritrea. You see that greenish striped area. That's the Danakil Basin. It's basically a dried up sea 5 million years ago, where there's layers of minerals, of salts put on top of each other and dried up, and it's a great opportunity to actually do the mining and get the product out. So that's where we're based, very close to the Red Sea, very close to infrastructure, and very close to global export markets. So this is the project, and I'll tell you a little bit more about the project in the next slides. Now let's look at the Danakali investment case. So I mentioned the deposit where it sits, but it's very large. It's got a significant mine life, about 200 years of mine life, yeah, back to the slide. So we got 200 years of mine life with a 1.1 billion tons reserve, which is basically giving you 203 million tons of SOP product, which is good for about 200 years. And we're well advanced in our financing. We have 200 million senior debt. The documents were agreed last December, and we have $50 million of equity investment from African Finance Corporation. Senior debt is from African Finance Corporation and Afrexim Bank, so we're well on the way. We need, and we'll go into a little bit more detail later, but we need about 320 plus some fees. But if you look at the $250 million that is committed, we're well on the way with the financing. And the way that we can produce is really low cost, and one of the reasons is that we are very close to the shallow, very close to the surface with our product. So it's a very shallow deposit, so we can keep our costs low. We don't have to sink shafts, and that puts us in the really first quartile of the cost curve, and gives us great opportunity to have a low cost mining, low cost production. We anticipate a cash flow of about $85 million per annum. That's the Danakali share. And then we have de-risked the project further with a offtake agreement with Eurochem. Eurochem, I'll talk a little bit more detail on that later, but a big fertilizer producer which has come on as a partner that has agreed a 10-year offtake agreement, which is giving us certainty for our cash flows. We have commenced the development of the project, which kicked off the work with DRA, and we're on our way of expected production in 2022. We are operating in the premium segment of the potash industry. Key fundamentals and are very healthy, and we'll talk about that later in the presentation. And all in all, we expect very attractive economic returns with an NPV of $439 million and an IRR of low 30s. So let's talk about the products that we will be using in the markets around that. So the potash market is in general a very big market where you mostly hear about the muriate of potash, and then you would have the sulphate of potash, which is a premium product of potash. We will be focusing on the sulphate of potash. It's an environmental friendly, chloride-free source of potassium and sulfur, and that's really very important. The chloride-free makes it a premium product because it can be applied on sensitive crops, and mostly these crops are high value, like fruit and vegetables, coffee, tea, and nuts. And because there's no chloride in it, it doesn't affect the taste, and it has a very good yield and production improvements for the farmers in the agriculture. So it's a market for the SOP market globally, about 7 million tons, of which half of that is China. And prices of the SOP is about $450 to $600 a ton, and that's really depending on the grade, whether it's standard, granular, on a soyable grade, and it's depending on where it's going to be delivered. But it's a premium product, and because it's the high value crops, it's an insurance for farmers to get the best yields and the best efficiency on their farming technology. The MOP market is a much bigger market, about 67 million tons. Prices between $200 and $300, and they're normally applied on maize and grains and soybeans, so more the stable crops, and where we are playing the SOP market, that's really the premium product. Now let's talk about the market potential. I mentioned 7 million tons of demand currently out there, and it's really driven by obviously the well-established and well developed agricultural industries like the US, like Europe, and like China, where a lot of the high value crops are coming from. You see the application of SOP in these agricultural industries is quite high, and the yields and the efficiencies in these farms are a lot higher. So to that respect, you see these three countries leading, but then you see there's a massive under-application in Latin America, in Africa, in Russia. You see very little happening in Canada and Australia. So in India has another big potential of applying more SOP and increasing your efficiencies, and this is where we think that the potential of more SOP is quite significant.